Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby. Good morning. It's Quincy Krosby. It's The Talking Point. It's Monday morning, and it's August 29th. And it looks as if we're going to have a difficult day in the market. Please, S&P 500, you want to see 3,900 held. We're not technicians, but we do follow some of the technical aspects of the market. And the reason is this, that, a good portion of the market trading volume is dictated by algorithms. 40 to 50, 60% of daily market volume is algorithmically based. It's high frequency trading. And so while we don't sit here, with charts looking at it, but we know that there are certain levels that if they're broken, or if they're held, it actually will portend where the market is focused. So 3,900 on the S&P 500 today is you want to see that held. In any event, let's just go back to Friday, if you do not mind, because it was some morning. 8 to 10 minutes that Chairman Powell spoke, 46 times that he mentioned inflation, and the runner-up was how often he said price stability. And this is not new. Whenever he speaks, this is what he said. But before, the market interpreted, a pivot down the road, the Fed will, just turn, perhaps cut rates. No, he made it very clear. And this is, I think, the most important point of what he said. He said, when we raise rates, we're going to stay there for a while. We're going to make sure that we have conquered inflationary pressures. And that provides uncertainty, right? We're going to stay there. What does exactly that mean? For how long? How many data releases do you need before you start thinking about your next move? This is key, as well as obviously where he said, we will do what it takes to restore price stability. And he made it very clear that, it could affect the labor market and the overall economy. That's something we knew. They've been saying that all along. But this is an example of the power of the Fed chair speaking, as opposed to every Fed member that goes out and talks one after another. Because after all, they gave the same message right after the market decided that the Fed was going to go easy earlier than obviously he implied when he spoke on Friday. One after another, coming out and saying the Fed has a lot of work to do. It's going to be difficult, one after another. And yet the market was, maybe. But he was clear, he was concise. One other thing, if I may just go on about this for just another minute. And that is, I thought it was very interesting the way he talked about other Fed chairmen, right? Even Paul Volcker, whom everyone is, Paul Volcker came in with a hatchet. And the reason he had to do that, by the way, back in the late 70s, 80s, is that the previous Fed chair just, paused, raised rates and then paused, and then that just left a stagflationary environment. But Chairman Powell did not mention that Fed chair, who was actually named Arthur Burns, but he mentioned the other Fed chairman who, had to fight inflation. And I think this was about his legacy. He didn't want to be known in history as the one who just gave up and just left us in a stagflationary environment. So what does this all mean for everything? It just means the Fed at this stage is prepared to go higher for longer. And again, they are data dependent, just as is the market. So we'll watch all of the data releases, which are the ones that matter, that the labor market. But, again, because the labor market is strong, he has the luxury, if you want to use that word. I use that word because in a way, that's their other mandate. And so even if the labor market is hit because of the higher rates, you still have a strong core in the labor market. And right now you've got 3.5% unemployment. That's pretty darn good with 525,000 new jobs created last week. It's still strong. But he said, we're prepared to, see the labor market weaken if we have to. And to leave it with this, he has always maintained you cannot have a strong labor market. You cannot have a strong economy if we do not have price stability. And he talked about that. And I think, I think even his critics out there were just like, this was a good speech. It was strong, concise. He sent the message. And moreover, it was unambiguous. So this week, the market has quite a bit to take a look at. Consumer confidence was going to come out. But what's interesting about this, we're already seeing in the University of Michigan's Consumer Sentiment Report, consumer confidence coming up. And oil prices, gasoline prices have a lot to do with that. I think early on, as we started to see gasoline prices climb higher, I mentioned that gasoline prices have an impact even on folks who don't drive, even ones who are driving electric vehicles, because you see it every day. And inflationary expectations very often are built heavily, not just on food prices, but on gasoline prices when they go up every single day. And also the blame on who is in the White House gets blamed when gasoline prices keep going up. Well, they've been coming down, about 77 days down. I think it's 78, 79 days straight downward. And if they keep going downward, obviously that is going to affect headline inflation, meaning it'll come down. Now, also, I want to mention food prices because they're there, right there in headline inflation. And unfortunately, because of the drought, what we're beginning to see is that the food prices, when I say food, grains, going higher. I looked at corn going higher, all because of the drought. And it's not just the drought here, it is the drought over in Europe too. So food prices were beginning to come down. We'll see if they continue. I pointed out, I did a talk last week, and I mentioned steak prices. Yeah, steak prices coming down, which is interesting because that was marching higher. I mean, it was almost out of reach. We're also looking at fertilizer costs because obviously fertilizer is crucial for farmers. And, if they have to, manage with these costs rising that go into making fertilizer, and natural gas is used in the process. So it looks as if that farmers worldwide are trying to negotiate the ability to create fertilizer, but trying to keep the costs down. So we're going to take a look at food prices, over the course of the week and next week to see whether or not they are continuing to come down, or as there is concern over grain prices climbing higher because of the drought. Those are input costs, just like wages. So speaking of wages, this week what is going to be crucial, and I'll get right to it, is on Friday, the labor market. And here the expectations are, meaning consensus estimates going in, are for 325,000 new jobs. But remember, the last payroll report we had, I think it was about 250,000 new jobs was consensus estimates, and we came out with, 528,000 new jobs. But 325,000 new jobs is what the consensus estimates are, and also maintaining the unemployment rate at 3.5%. In terms of, again, consensus estimates, and by the way, what does that mean, consensus estimates? It's all of the analysts coming in, giving their opinions on various surveys, and then you come up with an average. So the consensus estimates, and this is important, on average hourly earnings, coming down a tad. And why is this so important? It is that if wages keep going up, companies raise their prices and hope to pass them along to the end user, the consumer, on the retail side, and businesses that are buying goods or services. That's why it's important. And he mentioned it. Fear that it is becoming entrenched, meaning you start thinking that way. It's a psychology that takes over, that, oh my goodness, the prices are going to go up. We better buy something today. So this wage number is going to be crucial for the market. Also on Friday, we're going to have factory orders. And by the way, this has been actually holding up. It's pretty amazing that we get these numbers coming out where it shows, a decline, and then we see something where it's a bit positive. And we're also going to look under the, core capital equipment orders. This is, when you dig down and you take a look at, what exactly is moving in the market. So that's Friday. But before we even get to Friday, what we're going to be looking at is the Case-Shiller Home Price Index. That's tomorrow. And by the way, home prices are coming down. They're coming down across the country. What we're seeing particularly is in those areas that were, what we call pandemic locations, pandemic destinations, where folks just took off from city centers. The prices are coming down. One area that is mentioned a lot is in Idaho, but over on the East Coast, they're looking at areas on Long Island. I think if you've heard of the Hamptons, folks went out there just to get away, and prices are coming down as those houses are going back on the market. Other thing I do want to mention in terms of Wednesday's ADP Employment Report. This is the private sector report. Yes, the direction of where ADP comes out is followed, because the thought is that we'll see that in the Friday's numbers, but it's not a direct positive correlation. Remember, it is the private sector report, and the report on Friday also includes government jobs. Then we're going to also look at, and I look at this very closely, and that is on Thursday, the Institute for Supply Management, ISM Manufacturing Index. Line in the sand is 50. The expectations are that report will be over 50, but it is coming down. It's inching down. But the expectations are that the headline will be 52, and that means we are still in expansion territory. But again, the expectations are that if it keeps inching down, we're getting awfully close to that line, 50. And where do we go from there? We're looking at new orders. Obviously this is important. New orders is what it is all about. And we will be looking at expectations for hiring, an extremely important report. And by the way, that same day on Thursday morning, there is the S&P U.S. Manufacturing Purchasing Managers Index. This is S&P Global. That is another report that looks at the same information. It is all about purchasing managers. They are the people who know everything about orders, new orders. They follow everything. If anyone on this call has ever worked in a restaurant, by the way, there is a purchase. It may be the owner, it may be the manager, but they know what to order. They hope that they get it right, because you know what they don't want? They don't want inventory. They don't want to make a mistake. So at every single level, there is a purchasing manager. I also think in households, I consider myself the purchasing manager. I kind of hope we don't have any leftovers. I hope that we can use everything that I buy, especially as prices have moved higher. But that's the concept, is that the professional purchasing managers have a real grip on what is needed and what they expect to be used, and at what input costs. So these are important numbers on Thursday, September 1st. We'll see construction spending as well. And then on Friday, it is truly all about the labor market. What the market wants to see and what the Fed wants to see is to see weakening in the labor market. Make no mistake about it, that is crucial in the Fed's eyes, because they don't want that spiral of wages climbing higher. And the more that you see, by the way, job openings pulling back, how that is interpreted by economists at the Fed is this, that the fewer job openings, when they start really receding, gives the worker less ability to demand higher wages. So it's not something that sounds particularly nice to talk about, but when you have a Federal Reserve determined to fight inflation, this does matter. And last but not least, around the world, Chairman Powell's comments were echoed by virtually all of the Federal Reserve speakers at the Jackson Hole, Wyoming meeting. It didn't matter where they came from. They all said that is our number one job, to fight inflation and go in with higher rate hikes initially. In other words, some of them are just starting. The European Central Bank has just started with the 50 basis point rate hike. There's another one coming up this month, but the view from the speakers from representing the ECB was we need to go in there with a strong move. And so that really echoed what Chairman Powell said. As far as the Fed meeting in September 21st will be when they make the announcement. Right now, it is between 50 basis points and 75 basis points, really a coin toss. Friday is going to matter, but also what is going to matter is September 13th is when we get the Consumer Price Index report, and that is going to matter. The Fed's PCE, Personal Consumption Index report that came out on Friday morning, just before the Fed's meeting, yes, it came down a bit. As one of the Fed presidents from Philadelphia, from the Philadelphia Bank, said on television, he said, it gives us a glimmer of hope, but it's not enough. And then after that, Chairman Powell gave his remarks. So there's work to be done by the Fed and the market. Please, S&P 500, let's see if we can hold 3,900. Earnings are going to matter. We're going to get to the third quarter earnings season fairly soon. And it's going to be extremely important. So have a very, very good week. I'll be back on Tuesday. Have a safe Labor Day, long Labor Day weekend, and we'll be back. Don't hesitate to get in touch. And thank you so much for coming and listening to Talking Point. Goodbye.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.